QuickBooks Pro Desktop 2021. Enter transaction for payroll using bank feeds. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our bank feeds test drive. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We now want to think about how payroll can fit into the process of using bank feeds. So when we think about the bank feeds, we're thinking about a process of basically taking the bank statement. Here's like a mock bank statement, not the one we will be using, but we're taking the bank statement, and that includes the increases and decreases to the checking account and helping to import or having those imported directly from the bank, and then adding those into our system. How would that work with a payroll process? There's a couple different ways we can do it. Let's kind of consider those now. Now, one thing you can do within payroll is run the payroll through QuickBooks. If you run payroll through QuickBooks, then your payroll is going to force you to kind of move away from a completely cash basis system. You're going to have information with relation to withholdings that you're going to have to process through the system. So to do that, it's an add-on feature. Let's first turn on payroll. We'll just turn on the manual payroll, a free payroll, so we can test it out here. If you were to add payroll, I do highly suggest actually paying for the payroll if you're going to run it through QuickBooks or use a third party to help you. I suggest talking to a CPA firm or accountant that you're not going to be paying to do payroll, so that they give you advice that's neutral about what they think your best options are, and then go talk to someone you're thinking about paying for payroll, such as QuickBooks or a third party. But we'll just go over it briefly here. If we go to the edit dropdown and preferences, and we were to turn on payroll, and I'm going to go to the payroll employees company side, and I'm just going to turn on the manual payroll here. So again, you don't really want to process payroll with the manual payroll because it's not going to help you out to calculate the payroll taxes. You'll have to do it manually, which is a little bit difficult, especially for the federal income tax, because it has the progressive tax system, which, it's pretty kind of difficult to do unless you have software to help you out with that system. So we're going to say learn more, and not learn more. I just want to add it and say next. I don't want to buy the payroll. And then I'm going to say okay. And then I activated it. And then I should see a little arrow down below. That means you got basically the payroll process on. So if I close this back out, I'm going to say yes. And we have our payroll item, and then we have the liability item. So there's two things that are going to happen with the payroll process, and cash is going to be involved with them, although there'll be an accrual type of process. We'll actually pay the employees whenever we decide to pay them, weekly, bi-weekly, semi-monthly, monthly. And when we do that, we will be taking money out of their check. That will be the withholdings for at least federal tax side will be federal income tax, Social Security, and Medicare. We have to report that information to them on a pay stub, even if we pay them electronically, given the year-to-date information and the current pay period information. And then we gotta take that withholding and pay it to the government at some later point. And when we pay it to the government at a later point, we'll record something for the payroll liability here. So when you do this process, then if you're thinking about, okay, well, how could bank feeds fit into that? Now, you can't really have a system where you're just going to wait until, if you're going to run payroll through QuickBooks, you can't really have a system where you're just going to wait till something clears the bank and then just add it to the system at the end of the time period when it clears the bank. You can't really do that, because at the end of the time period, the thing that clears the bank when you process the payroll here is going to be the net check. It's not going to be including the withholdings and whatnot. So to calculate the withholdings, if you do that within the QuickBooks system, you have to run the payroll first, which would generate some kind of a check or payment type of activity. And then you would be using the system for the bank feeds to match that item. So you'd be using the matching item here. So you'd have to actually run payroll and then process the payroll. And then when the check clears the bank, instead of recording it at the point in time it clears the bank, you would be using the matching feature. And then you'd have to actually process the payroll liabilities using the QuickBooks system here. So you would actually have to do it, not depend on the bank statement. And then you would have to use the matching process to pay off the liabilities. So it would look something like this when you process the payroll. When you process the payroll, you can do it like employee by employee in this format, where you got the total earnings minus the Social Security and Medicare. Income tax gives us the net pay. And then you got the employer portion of Social Security and Medicare. And you can think about that from the total employees, total earnings minus total Social Security minus total Medicare minus total federal income tax is the net pay. This is simplified because it's just talking about the federal side of things, and we're not getting into federal unemployment tax or state taxes, but this is the idea, or things like a 401k plan or other types of benefits. So then we got the employee portion as a total. So then when you put this into the system, you can think about it from paycheck to paycheck, what's happening. We would say, well, the expense should be going up by the $4,583, and then the liability should go up by the $1,070 for the first employee, which is Social Security, Medicare, and federal income tax in this case. And then the check that they're going to get is going to be that $3,512. So payroll expense goes up, liability goes up, checking account then goes down by the difference between the two. The same would happen for Erica. And then if you think about it in total, you can total these up as if they're one journal entry. So you can add these two up and say we could think about it in total. Now, what's going to actually clear the bank when you process the payroll of this is just going to be this item here. This is what's going to be clearing the bank, but you're supposed to record it in terms of the recording the payroll expense and the liability, and you need to report that per check to the employees, which is why you got to basically process it through payroll either within QuickBooks or outside of QuickBooks. So if you processed it, then after the check clears, you would then match out the net check after you processed it. So you'd go into QuickBooks and say, okay, let's go to the banking drop down, bank feeds, and go to the bank feeds center. I'm going to go to the unrecognized transactions. I'm going to hit the drop down here. I want to see the type as well. And then I'm going to close this back out. And I'm just going to use the type filter here to sort by check. So here we have our checks. And let's just assume like this check right here is a Visa check, but let's just assume it was a payroll check. If this were a payroll check that processed through, it would be the net check. And we couldn't use that to process the payroll if we're running it through QuickBooks, but we could use it to match. So what we would then do is go to our add item here. We'd say more details possibly, and then I'd match it. We'd have to match it to the payroll check that we processed when we ran the payroll. So that's one option that you can do. Another option that you can do with payroll to try to stay on kind of a cash basis is as a bookkeeper possibly, or for your own business, you're going to say, hey, look, I don't do payroll within QuickBooks. I'm not going to do that. It's an add-on feature. What I do is I work with a payroll company. You might have a preferred payroll company you work with. They process the payroll. They're going to do all the detailed information. They're going to give the employees the pay stub. They're going to track all that information so that they have all the information to compile the 941 quarterly reports, the 940 year-end reports, the W-2s, all that stuff. They're going to do that. Then they're going to give us a report that would look something like this, and they're going to process the net checks that go through our system. They're going to go through our bank account. And so that means that in QuickBooks then, we can then wait if that was the case, because the payroll will not be processed through QuickBooks. Possibly you could say it's going to be processed through a third party. We're going to wait till it clears, the checks actually clear, meaning I'm going to see this net check clear the bank, and this net check clear the bank once the payroll is processed. And then the easiest thing to do under that system would be then to go to QuickBooks and just say, okay, bank feeds, I see the net check clearing now, and then just record the account to payroll expense. Now that wouldn't be completely right on an accrual basis because you're recording the payroll expense at the net check level if you were to do that, right? You'd be recording the net check here and just recording it all to payroll expense without recording the full amount to payroll expense, the gross pay, and without recording the liabilities. So you'd basically be on a cash basis method, but then the payroll company would be taking care of the added detail. So you would have this added information, what the payroll expense was, what the payroll liabilities, because they would provide you with a report such as this, and they could give that information then to the employees on a pay stub, both year to date and the per check information on a pay period by pay period basis, and fulfill those requirements, which are like AR or human resources or payroll requirements. And then your books would be on a cash basis, and then you can basically say at the end of the year, when you need to do your, and they can take care of the 941 filing and all that, right? And then at the end of the year, when you do your taxes and whatnot, or you have to use your financial statements for some other purpose, like to get a loan or something, you talk to your accountant and say, I would like you to take my cash basis books here, and I would like you to take this report that I've got from whoever did my payroll outside and convert my books from a cash basis to an accrual basis as of the point in time that taxes are done, 12/31, the end of the year and whatnot, and then do what you need to do to run the taxes. So I'm just going to do it on a cash basis. I got my third-party payroll that's going to be basically given all the detail to fulfill all the payroll requirements, and I'd like you to periodically take me off a cash basis so that you can process the tax returns on whatever basis you need to at the end of the year. That's one way you can do it, and that would be the easiest thing to do, to use the bank feeds, because then you can just basically record the checks as they clear and just record them as payroll. And then when you actually pay the payroll liabilities, then you would record the payments of the payroll liabilities that would be actually paid to the government, and that's when you would record the the other side of the payroll expense, meaning we withheld the $1,070 at a later point in time. We're going to pay that to the government, and once we pay it to the government, we'll see it clear the bank and on the bank feeds, and then we'll record that as payroll expense. And we'll also see the withholdings on the employer side that we'll have to pay at some point. Once they pay it, it'll clear the bank, and we'll record it as payroll expense or payroll tax expense at the point in time that it clears. So the difference will be a timing difference, because we're waiting once again till it clears the bank. And so we can stick to a cash basis, and then we can ask the CPA or whoever, the tax preparer at the end of the year, to do that adjustment. So that's another method we can use. You can also try to say, okay, I'm gonna make the adjustment. I have a third-party person that is entering this data for us and tracking everything and whatnot, and then I'm gonna see this amount clear the bank in the bank feeds, and then you can instead of just recording the other side, the payroll expense, you can record this transaction. You can basically record the payroll expense at the $4,583, the liabilities here, and you could break out the accrual kind of process as you record the check. In other words, if you say this was a payroll check, for example, and I was to say, let's add more details to it, then I can add a line down here, and I can say, okay, this is the amount that was decreasing this is the amount that decreases the cash, and then I'm going to break it out to payroll liabilities, a liability account, and the other side, and then payroll expense. So you can basically break out the journal entry here as you add the paychecks to your system to kind of maintain an accrual basis. You will still not have all the detail necessary, breaking out like the detail of Social Security, Medicare, income. You won't have the pay period pay stub on each employee, each pay stub. You won't have near the amount of data that you would if you were processing payroll within QuickBooks, but you could try to make your financials basically more on an accrual basis in relation to the payroll process by breaking out a journal entry by journal entry when it clears the bank. So those are just a couple options to consider how bank feeds would fit into your process of do you want to discard? Yes. Your process of running payroll either within QuickBooks or working with a third party. If you are a bookkeeper and you decide to work with a payroll company and set up a system, then it can be a really nice relationship, because obviously the payroll company has an incentive for you to pick up clients to refer them for the payroll. And then if you work with a CPA or tax preparer that's within that system as well, you're not in competition with each other that way. So if you have a system set up that way, then it works real well. The bookkeeper's not stepping on the toes of the payroll company. The payroll company loves the bookkeeper. The CPA or accounting firm that does the year-end tax preparation and financial analysis, you're not stepping on their toes. You're doing the bookkeeping. They're doing the tax. Everything's a clear distinction, and you can create kind of a network that could be useful in that way. So those are just a couple options.